All right, let's jump straight into this explosive interim order from India's market regulator, SEBI, against Rajesh Exports. We're breaking down what has to be one of the most staggering corporate takedowns in recent memory. If you follow Indian markets, you already know that a regulatory action of this magnitude is exceptionally rare. So we're going to unpack exactly what SEBI found in this explainer, step by step, because it is an absolute roller coaster.
Okay, we have to start with this unbelievable number. Over 15 lakh crore rupees. That is the reported consolidated revenue Rajesh Exports claimed across 5 financial years. To put that into perspective, you're looking at a figure that genuinely rivals the GDP of some small countries. It comes in at roughly 180 billion US dollars. But as the regulators started peeling back the layers, that massive number started to look less like a financial triumph and more like a carefully constructed mirage.
Now here is where it gets absolutely wild. SEBI alleges that a mind-boggling 99.8% of that massive figure might be entirely fabricated. Yeah, just let that sink in for a second. Out of over 15 lakh crore rupees, the regulator suspects that nearly the entire thing is simply not real. It begs the question, how does a publicly traded company even attempt to pull off an illusion of this scale?
Well, to understand that, we need to look at what we'll call the Swiss subsidiary illusion.
Basically, REL claimed that their Swiss operating entity, Valcambi SA, was generating nearly all of their revenue. The setup went like this. The Indian-listed entity owned a holding company in Singapore, which owned another in Switzerland, which finally owned Valcambi. By claiming that 97 to 99% of their total revenue came from these overseas subsidiaries, they effectively parked the supposed actual business far, far away from Indian regulators.
But SEBI didn't stop there. They managed to get their hands on the actual Swiss-audited financials for Valcambi. And when they compared those real numbers against what REL was feeding Indian investors, the gap was just devastating. Take a look at 2022. Valcambi made 743 crore, but REL reported a consolidated revenue of over 3.39 lakh crore. It's like comparing a puddle to an ocean.
So the absolutely crucial takeaway here is that Valcambi's actual audited revenue was less than 0.3% of what REL was reporting globally. Not 30%, not 3%, less than 1/3 of 1%. This grand Swiss operation they kept touting was barely a drop in the bucket compared to the absolute tsunami of cash they were projecting on their Indian balance sheets.
Naturally, when SEBI appointed BDO India as forensic auditors to dig into this massive discrepancy, they hit a total brick wall. REL stonewalled them. They outright refused to provide access to their core accounting software or their journal entries. And their excuse? They tried to hide behind Swiss data protection laws, which, by the way, SEBI quickly pointed out only protect individuals, not corporate financial data. Nice try, right?
But the sheer audacity of this doesn't stop overseas. Let's pull back the curtain on the fake sales and circular trading happening right at home.
So, REL claimed to have sold over 11,400 crore in gold to a single Indian company called Affluence. But there was a rather glaring problem with that story. Affluence was just a tiny, SEBI-registered stock brokerage firm with only 113 crore in total revenue. They were a financial advisory firm. They had absolutely no business and no capacity to be buying or selling 11,000 crore worth of gold.
And when SEBI formally hauled Affluence in for questioning, the firm completely denied the whole thing. They stated on the record, REL was never a client, no agreement was ever signed, and no gold transactions were ever executed. That statement ripped a massive hole right through REL's standalone financial claims. I mean, if no gold was being sold, what on earth were these massive numbers on their books?
Well, the mechanics of the scheme are honestly mind-blowing. The so-called sales were literally just Chairman Rajesh Mehta playing the derivatives market with company money. He took corporate funds, used them as margin for his personal futures and options trades, and then illegally disguised 102 days of his personal trading turnover as over 11,000 crores of corporate gold sales. You can't make this stuff up. They were clearly so desperate to pump up those standalone numbers that they blatantly violated their own accounting policies. They took 867 crore in foreign exchange gains and another 204 crore in standard interest income from fixed deposits, and just illegally stuffed them directly into revenue from operations. It was a systematic effort to make the core business look dramatically larger than it actually was.
And the deeper SEBI dug into the balance sheet, the worse it got. Let's talk about the phantom assets and erased debts.
Back in 2024, When the stock exchange questioned a massive investment sitting on the books, REL confidently claimed it was for, quote, gold mines in Africa. Over 1,000 crore rupees supposedly invested in African mining operations. But you know, when you claim an asset that large, you kind of need to be able to answer one simple question. Where exactly are they?
SEBI checked every single financial statement across all of REL's global subsidiaries. They checked the holding companies. And their finding was definitive. There was absolutely no proof that these African gold mines ever existed, no identifiable investment anywhere. And when pressed on it again recently, REL essentially just shrugged and said they couldn't locate their earlier response to the exchange. Seriously.
Meanwhile, as they were inventing assets, they were also making debts vanish. Nearly 3,000 crore in trade receivables, money actually owed to the company, were quietly erased. They used these super shady adjustment entries to wipe away the massive debt, netting it against unverified, non-existent overseas entities whose emails literally bounced. And of course, they did all of this without telling their investors a thing.
Okay, so if the revenue was a total mirage and the assets were ghosts, where was the actual corporate cash going? Let's follow the missing money.
This paper trail tracks the astonishing flow of hundreds of crores from the public company directly into the personal pockets and private ventures of the promoter family. You've got Chairman Rajesh Mehta, his son Siddharth, and a lithium startup owned by Mehta called Ellist, all receiving massive transfers. And the real kicker? The vast majority of these funds were moved with zero board or audit committee approval, just huge, unapproved net outflows.
The routing was so incredibly convoluted that Rajesh Mehta actually admitted on the record to this process, stating funds were moved without revealing the bank account from which the funds had come. SEBI didn't mince words here. They labeled this maneuver exactly what it looks like: deliberate, systemic obfuscation designed to keep investors and their own board completely in the dark. So, the walls have finally closed in. Let's look at SEBI's interim order and the massive fallout from all of this.
SEBI has absolutely dropped the hammer. They aren't just barring the chairman from the markets, they're demanding full cooperation within 30 days, forcing a brand new forensic audit and, this is a big one, forwarding the case to the National Auditor Watchdog, the NFRA, to investigate the statutory auditors. Because honestly, you have to wonder, how did auditors let a 15 lakh crore illusion slip by them for 5 entire years?
But the real tragedy highlighted in this explainer is the human cost. While insiders were allegedly siphoning funds and spinning these fake revenues, retail investors were pouring in. The number of everyday shareholders skyrocketed by nearly 900%. And when the stock inevitably crashed from its peak of over 1,000 rupees down to just 80 rupees, more than 12,700 crore in public wealth was just wiped out. Gone.
And that leaves us with one terrifying, provocative question as we wrap this up. When a publicly listed company can allegedly fabricate over 15 lakh crores in revenue right under the noses of auditors, exchanges, and rating agencies for half a decade, who is actually protecting the retail investor in the market? Think about that the next time you're reading through a shiny annual report.